Welcome to the Silver Change Chronicles. This is a safe space where we believe finances don't need to be complicated. Today, we're going to break down your credit score, why it's important, how to improve it, all the nitty gritty stuff. All right, let's get into it. According to Intuit, there are two major credit scoring systems: FICO, formerly the Fair Isaac Corporation, the older system, and Vantage Score, a newer model created by the three credit bureaus. Because FICO is older and used by 90% of lenders, we'll focus on that one. We'll talk about Vantage Score another time. FICO is a California based data analytics firm. In 1989, they created their system for rating the use of credit and debt by individual consumers. This system is occasionally updated and tweaked, with different versions being used in different situations. FICO offers a set of tailored, industry-specific scores for auto lenders, mortgage lenders, and credit card issuers, which really just means you actually have several scores, depending on which credit bureau information is used, whether it's for an auto loan or a mortgage, the day of the month a credit check is run, etc. There are a lot of factors that can affect your score. Think of it more like a snapshot. Major credit bureaus and lenders, not FICO, decide whether to adopt new versions and the timeline for doing so. According to MyFICO, your credit score is a three-digit number that tells lenders about your credit worthiness. Basically, how likely you are to repay a loan based on your credit history. See how that popped up again? FICO scores are the standard used by approximately 90% of lenders. They have a range of 300 to 850, and the higher your score, the more likely you are to repay your debts on time. What are the minimum requirements for a FICO score? According to MyFICO, you must have at least one account open for 6 months or more and at least one account that has been reported to the credit bureau during the last 6 months. What are the score categories? Scores are broken up into 5 categories. The first one is poor, which is 300 to 579. With this category, you may not be approved for loans or credit and would not qualify for favorable terms. This score is well below the U.S. average, and many lenders choose not to do business with someone whose score falls in this category. Utility companies may require security deposits. Next up is fair, which is 580 to 669. Many lenders will approve loans with this score, but with higher interest rates and fewer options. This score is below the U.S. average. You need at least a 580 to qualify for an FHA mortgage and a 620 for a conventional mortgage. Next, we have good, which is 670 to 739. Most lenders consider this a good score, resulting in average rates and terms. Experience states that the average FICO score is currently 715. This score allows you to avoid security deposits and shop for better rates on autos, etc. Next one is very good, which is 740 to 799. This demonstrates to lenders that the borrower is very reliable, resulting in competitive rates and terms. This score is above the U.S. average, resulting in higher chances of loan approval and potentially lower insurance premiums. Finally, we have exceptional, which is 800 to 850. This clearly demonstrates to lenders that the borrower is an exceptionally low risk, resulting in great rates and terms. This score is well above the U.S. average. With this score, borrowers can do pretty much whatever they want. What makes up my credit score? According to Intuit and Bank of America, your credit score is made up of 5 parts. An impressive 35% of your score is made up of your payment history. Basically, do you make your payments on time? Your payment history takes into account how many late payments you've had as well as how late they were. Always make at least the minimum payment by the due date. The next largest chunk of your score is determined by the amount owed. This is 30% of your score. Basically, what is the ratio of your debt to your credit limit? How much you owe divided by your total available credit. Lenders prefer that you use less than 30% of your available credit. This is called credit utilization. High balances can hurt your score. 15% of your credit score is made up by the length of your credit history. Basically, how long have you been managing credit? Generally, longer credit histories are considered less risky as there's more data to determine payment history. 10% is made up of credit inquiries or new credit. Basically, how often do you apply for credit? Lenders see you as a bigger risk if you apply for or open several new credit accounts in a short period of time. Too many recent applications for credit can negatively affect your credit score and can be taken as a potential sign that you may be desperate for credit. The final 10% is made up of your credit mix. How many different types of credit do you have, and how do you handle each? Having a mix of loan types such as credit cards, student or auto loans, and mortgages is good for your score. It shows lenders you can handle multiple payments at the same time. How do I improve my credit score? According to Investopedia, you can improve your credit score by paying your bills on time. 6 months of on-time payments are required to see a noticeable difference in your score. Make at least a minimum payment due on each account. Pay down balances. Aim to use no more than 30% of all available credit. Less is even better. Try using the snowball or avalanche method to pay down accounts. Increasing your credit line. If you have credit accounts in good standing, call and ask about a credit line increase. If granted, don't spend the amount. The point is to lower your credit utilization rate, or the amount of your credit that you're actually using. If you're not using your Otis credit card, don't close the account. Depending on the account's age and credit limit, doing so can hurt your credit score. Think about it. If you've had your Otis card for 10 years and you decide to close it, you lose 10 years worth of credit history, and that's 15% of your score. Closing the card will almost certainly have a negative effect on your score. Correcting any errors on your credit report. Every year, you're entitled to one free copy of your credit report from each of the 3 bureaus. Follow the steps provided by each bureau if you find any inaccurate information. If the credit bureau determines that your dispute is valid, it will correct or remove the negative information. Credit disputes are typically resolved within 30 days. Avoiding unnecessary debt. Pretty much every time you apply for credit, the lender will run a hard inquiry. Each inquiry will typically knock less than 5 points off of your credit score, but multiple inquiries in a short period of time, especially when applying for credit cards, could have a compounding negative effect. Become an authorized user. Ask a financially responsible loved one to add you as an authorized user to one of their cards. Once you're added, the card issuer will typically report the full history of the account to the credit bureaus within a month or 2. Do not go crazy and start spending on this card. In fact, don't spend anything at all. Pretend you don't even have the card. Remember, this person is doing you a huge favor by adding you as an authorized user. Why does it even matter? Your credit history and your credit score work hand in hand to make up what we call credit. Your credit history helps provide the data needed to calculate your credit score. A good credit history with on-time payments and low credit utilization leads to a high credit score, while a poor credit history results in a low score, causing lenders to view you as a higher risk. A higher credit score helps you more easily secure an apartment or house, helps determine if a deposit is needed for utilities, and allows you to buy or lease a car with more favorable terms. Insurance companies may even check your credit when quoting you a rate. How do I get my score? Your Vantage score is easily available through Credit Karma. We're not sponsored. I've just used them for years and I really like them. You can get your FICO score from credit monitoring services. Some are free, and some credit card issuers provide free monthly scores to their customers. If you're applying for credit, many lenders will provide your FICO score at no cost. It's also available from nonprofit credit and housing counselors, again at no cost to you, or you can pay a credit score service. So, to sum it up, FICO is the oldest and most widely used credit scoring system. The average FICO score is currently 715. Your credit score is made up of 5 parts: payment history, amount owed, length of credit history, credit inquiries or new credit, and credit mix. If your score isn't where you want it to be, there are several things you can do to help increase it. Go to annualcreditreport.com and click the green box to request your free copies of your credit report. A higher credit score helps when getting a car, a home, or even possibly a job. Your FICO score is available through many credit card companies, lenders, and nonprofit credit and housing counselors. Well, stay tuned for our next episode where we discuss your credit report. And if you haven't seen it, check out our last episode where we discussed your credit history. Well, that about wraps things up for today. If you learned one new thing, do me a favor and hit that like button. That lets both me and the algorithm know that you like this type of content and want to see more of it. If you learned two new things, hit that button and tell a friend about us. That helps our channel grow and helps us reach more people. We hope to see you here again at the Silver Change Chronicles, where we believe finances don't need to be complicated.